Hi, this is Doug English with Act Advisors, here to talk to you about something you've been hearing a lot about, the Treasury Yield Curve Inversion. As you know, at Act Advisors, we pay a lot of attention to the indicators of a recession because investing in a recession has a much greater risk of loss historically than investing outside of a recession. So if we can predict when a recession is more likely, we can get defensive with your accounts. So recently, the press has talked a lot about the 2-year and 10-year yield curve inversion. As you see here behind me, the 2-year interest rate on the yield curve is right up here in that 2.5% range. And out at the 10-year point, the curve dips just a little bit to be ever so slightly less than the 2-year rate. So why does that matter? It matters because it's sort of the indication of the Fed putting the brakes on and slowing the economy. And historically, the inversion of that interest rate curve has been predictive for recessions. Now, there's some big problems with this particular indicator. The 210 indicator has predicted 8 of the last 6 recessions. In other words, it is said recession twice when there was not a recession. So it's a little too responsive sometimes. We prefer to pay attention to a different combination, which is the 3-month, as you see down here at the end, the 3-month, which is a much lower figure, versus the 10-year, which is obviously a very big distance between the 3-month and the 10-year location on the interest rate curve. And it is not inverted. Now, when it inverts, it does a very good job of predicting when a recession might be around the corner. Now, neither one of these does a great job of saying how long until the recession shows up. It can be historically as long as 6 months to 4 years from when the yield curve inverts. And believe it or not, the returns in the stock market historically in the beginning of that period are actually very good. So we're paying a lot of attention to the shape of the yield curve. We get the data every single day, and we know what is happening. We see what is out there in the press. We have taken a lot of activity in your accounts, and I know you've seen that in my videos in the past. So if you have any questions, please call us here at Act Advisors, and we'll include the links to the previous videos if you want to check out the bond rotation instrument that we've used to protect you against these interest rate movements. Thank you very much for your business.